Zoom is reporting earnings today after the close, and in this video I want to determine if Zoom is trading at a good valuation by looking at some valuation metrics, analyst estimates, and using my Excel spreadsheet. Starting with the valuation metrics, Zoom is currently trading at a forward PE of 20, which is actually not as expensive as I thought. Remember that the market average is around 15. I would not focus on the current PE because this was just a weird year in terms of their earnings, and they are expected to get back to where they were. In terms of price to free cash flow, it is currently at 16, so it does look good in terms of price to free cash flow. When the price to free cash flow is lower than the PE, this means that they have more free cash flow than earnings, which is something that I like because free cash flow is harder to manipulate. And actually, a lot of value investors only focus on free cash flow. Then they are currently selling at a 4.5 price to sales. If we compare it to a company like Microsoft, which is a software company and has similar gross margin, Microsoft is trading at an 11 price to sales and has 68% gross margin. And Zoom has a 74% gross margin and is trading at a 4.5 price to sales. So it looks very good in terms of price to sales. Overall, the valuation metrics are a positive for Zoom stock. The forward PE is alright, the price to free cash flow is good, and the price to sales is very attractive. Now, let's look at analyst estimates. Analysts are expecting this company to make $5.30 in 2027. If we apply a 15 PE to this company, it would make it an $80 stock, which is only a 15% upside from here. So not a lot of upside according to analysts, but these are just analysts and you don't have to take them very serious. In terms of revenue growth, as you can see, analysts are not expecting a lot of growth. Around 7% a year for the next 5 years, which is not a lot, but you have to remember that this is a company that grew a lot during COVID, and they are not going to have the same amount of growth that they've had in the past. Finally, to calculate Zoom's intrinsic value, I used my Excel spreadsheet, which tells me at what price you should buy a stock based on the assumptions you put in. And I did a 7-year analysis. The stock is currently trading at $69 a share, and as you can see, based on my free cash flow analysis, you would buy this stock all day long. And based on the earnings, the stock needs to fall a little bit. I don't currently own Zoom stock, but if this stock on earnings falls below $55 a share, I will be buying this stock because I think the valuation would look very attractive. Also, keep in mind that my Excel spreadsheet does not take into account the balance sheet, and Zoom has an amazing balance sheet. They currently have a 20 billion market cap and a 14 billion enterprise value. This means that they have no debt and they have a lot of cash on hand, so this is amazing. I hope you enjoyed the analysis, and I'll see you on the next one.